going to be dedicating a shit ton of my time towards trading, putting a lot of energy into it. So over the next like month or so, what I'm going to do is I'm going to do a video similar to this, where I'm going to just pretty much break down the trades that I took last week, how I did in the markets, the wins, the losses, anything extravagant happens, I'll just go over that as well. In this video, what I'm going to do is I'm just going to go over like my general plan, and then I'm going to show the different strategies I'm going to be using. I'm going to use 3 different strategies. So I have 3 different funded accounts, 1 for each strategy. I'm going to go over the statistics that I have for like the last month with the strategy. And then I'm going to show like how I actually find a trade using each strategy. And then I'm going to just show you the trades that I did last week, kind of get an idea of what they're like. For my plan is I'm going to trade New York Open, Asian Open, 2 Asian session strategies, 1 New York session strategy. And I'm going to try and do some videos in like some cool spots. I kind of need to get out of the house more a little bit. So I might do one on like a beach or something. I don't really know why. Or maybe like on top of a building or a roof. Or maybe in a meadow or something. I don't really know. But I'm going to just try and get a little creative with them. I'll hop on the charts here and I'm just going to show the 3 strategies that I'm going to use, starting with my Asian session, second Asian session, and then the New York one as well. Pretty much the plan is 3 different funded. They're 2-step FTMOs. I have 3 different strategies. I'm going to do a video once a week breaking down my trades. We're just going to hop right into the first strategy. The first strategy that I have is with gold and silver. I'm looking for a sweep of past session liquidity, and then I'm trading it to the other side. So I'll show you a little bit of a live example here of some trades. This right here. So you can see that we have liquidity here at the low. Asian session opens, comes down, sweeps, and we take a trade to the high. Okay, I'm going to walk down the step by step, kind of show what I look for in each trade. Okay, we're on gold right now. First thing I do when I come to the charts is I mark out the high of New York session and the low of New York session. Mark out the high, mark out the low, and then I wait for it to either sweep the high or sweep the low. It has to be during Asian session though. So if it sweeps pre-Asian session, that becomes our new liquidity. For example, right here. This is our high of New York, but it swept before Asian session started, so this would become our new area of liquidity, just like that. So we wait for a sweep, bam, sweep. This is on the 15-minute, by the way. After we get a sweep of the high or the low, I drop down to the 1-minute, and all I'm looking for is a bullish change of structure if it sweeps to the bottom, or a bearish change of structure if it sweeps to the top. So you can see right here, we swept the bottom. So I'm looking for a bullish change of structure, which would be right here. Okay, we get a bullish change of structure on the 1-minute, as you can see right here. Then any 1-minute fair value gap, as long as I get a candle in the direction of the trend, so in this case, a bullish candle from a fair value gap, I'm entering off of it. Bam, like that. That's our bullish 1-minute fair value gap. Obviously, there's a bunch in here. I'm just going to mark it as 1. So we get a bullish candle rejection off of our bullish fair value gap. Stops go right at the low, and then we put our take profit at the high. Now, I do it a little differently. This is how I mitigate my risk, because I'll go into the win rate and everything afterwards. But what I do is I use 2 take profits. So I'll put take profit 1 at either the high of pre-market before Asian session, or I'll do it at the high of Asian session that's already been created. Now, if I don't see if the high of pre-market or Asian session is under a 1-to-1, then I just set take profit 1 to a 1-to-1. Because the reason I like to do that is that if we hit take profit 1 and I'd never move my stop loss. So when price comes back down to stop loss, we just break even, right? Because I hold these. You'll see these can swing for a little bit. This is our high right here. It's a 0.44. So what I'd do is I'd set it to 1. So this would be our take profit 1. And then I'm letting that bitch ride. Never move stop loss, never move take profit, never move early. You just let it ride. That's take profit 1. So now we would technically be break even. Price can come all the way back down to our stop loss, and we would not lose any money because we've hit a 1-to-1. So we take out 50% of the trade at 1-to-1, and now it's free money. Bam. We smack take profit. There we go. Now I'll show you why I like to do that a little bit. Is we'll go here to these stats. In the past month and a half, since the beginning of June, this is how far I back tested to get these stats. On gold, there would have been 17 trades. And on silver, there would have been 18. Out of those 17 trades, 6 of them would have won, 11 of them would have lost. But because I mitigate my risk by doing the take profit 1, 11 of them actually would have been profitable. So I would have hit take profit 1, and then it would have gone to stop loss, and then I would have actually like turned a profit on it. The reason why I like this strategy so much is that if it goes to your final TP, which is not like a crazy, it's only 35% of the time that it'll go to full take profit, but when it does, it prints. You're getting these big trades, massive runners, right? But that's like, there's only a 35% chance that that's going to happen. So, but still, you still have a 64% chance that it's going to be a profitable trade. So I'll show you here a little bit. All right, this is a great example. So we had our sweep. We'll drop down to the 1 minute. Bullish change of structure, rejection off of this fair value gap. And you can see when I entered, take profit 1 was at the pre-session high, right? So it wasn't at New York, and let's see if it was at a 1-to-1 actually. All right, so this was actually higher than a 1-to-1, so it was a 1.25, which means that once we hit take profit 1 and we go, if we went back down to stop loss, we'd still make 0.025%. So if we risked $10 and we used $20, you would have made, fuck, my math is horrible. But whatever, you get the point. So using this strategy right here, so using that method right there, even though you're not going to hit full take TP every single time, most of the time, I can't lie, your take profit 1 is above a 1-to-1, right? So even though you're not going to hit full take profit every time, you're still going to turn over a profit even though you're not smacking complete TPs. But when you do smack a complete TP, that bitch fucking is fire. Now, strategy 2. All right, strategy 2 is super similar to the first one, but I do it on these 4 Forex pairs. So I do it on GBP JPY, NZD JPY, do it on UCAD, and then I do it on USD JPY as well. And the thing that I do that's a little different is instead of waiting for, pretty much I look for the sweep before Asian session. So it's in between, it's pre-market. So it's right after New York and then afterwards. I look for the sweep in between New York and Asian session. The only thing that's different from this strategy and the gold strategy is I only use those 4 Forex pairs, and then I look for my sweep before Asian session, right? So I don't look for the sweep during Asian session. I'll show you right here. Okay, we'll do a trade for each of the 4 pairs, GJ, blah, 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 whatever they are. All right, let's do this one. All right, similar to the gold and silver one, first thing I'm doing is I'm marking out New York high and New York low. Now, where it gets different is instead of looking for my sweep during Asian session, I'm looking for it during pre-market, right there. We sweep the bottom. We sweep the lows of New York. Right now, all I'm looking for, I don't enter before Asian session. So now I'm waiting for Asian session to start. Now all I'm looking for is for Asian session to break structure on the 1 minute, and then I'm entering off of any fair value gap. So if we look right here, break a structure, then we have a fair value gap right underneath right here. So price comes in, I'm looking for any candle that's in the direction of our trade. So in this case, it would be bullish. Stops at the low, take profit at the highs. No take profit 1 like the other one. We're just holding this bitch. We're never moving stop loss or anything. Only times I won't do less than a 1-to-1. So the only times I'll ever move my stop loss to break even is if, like, say the entry was right here and it's under a 1-to-1, I would drag my take profit to a 1-to-1. But once we sweep New York highs, then I would move it to break even, if that makes sense at all. But that's not the case here. So we have our rejection, our entry on the 1 minute. Let that bitch play out. Bang. That's the strategy. And we do the same thing for, let's find one on this one. Mark out high and low of New York. Wait for a sweep during pre-market. Instant sweep. Now we just need to wait for the start of Asian session. So we're looking for a break of structure during Asian session. So that would be right here. Break. Now any fair value gap we're entering off of. Bam. Stops at the low. I'll mark out our fair value gap as well. Take profit at the high of New York. I'll just let that shit run out. Smack. Pow. Pow. Boom. All right. Next one we have is UCAD. Oh, look at that. Same day. This would have happened on the same day. Mark out the high, mark out the low, wait for a sweep during pre-market. So this would have been the high. Instant sweep. Now we're just waiting for Asian session to start. So we have already clearly broken structure to the downside. So now I'm just looking to enter off of a fair value gap and see a nice rejection during Asian session. Honestly, I can't lie, I would enter off of this right here. Bearish candle, nice rejection, stops at the high, take profit down at the lows. Banger. Smacked. Oh, look at that. Same day, then. This day would have been popping. Marking out the highs. Sweep during pre-market. Now we're waiting for Asian session to start. Obviously, we're bearish, so we're just looking for a rejection off of a fair value gap. Like that. Stops at the high. Take profit at the lows. Damn. Almost 10-to-1. Look at that shit. Bang. Almost a 10-to-1. I never move stop loss. Never close early. I always let it play out. That's how I find those trades for this strategy. We'll go over some of the stats right here. Same as before. Since June 1st, on GJ, there's been 13 trades, 9 wins, 4 losses, 9 profitable trades. So win rate of almost 70%, lose rate of 30%, profitable. My average risk reward on this is a 1 to 9.4, or not 1.94. JPY, 20 trades, 12 wins, 14 profitable, and that's a win rate of 60%. Average risk reward is 1.49. UCAD, 8 wins, 4 losses, 5 profitable trades. So it's a 50% win rate, but it's a 62.5% profitable trade rate. And the average risk reward is 2.43. UJ, 14 trades, 9 wins. That's a 64% win rate, 64% profitable trade rate. And the risk reward on this one is so high. The average one is 3.48. Now, obviously, there's not that many trades, so it's a little skewed. Actually, I mean, not even, because that's higher than this one. So, low-key fire as fuck. All right, third and final strategy. This one is insultingly simple. It is so bad. It's only with gold. I only trade it with gold. All I do is I mark out the high of London and the low. Can't forget about the low. What are the lows without the highs, eh? What are the highs without the lows? Then all I do is I just wait for it to sweep. During New York, I'm literally looking for one confluence, and it's just this candle right here, a rejection candle. It has to have a massive wick, and it has to be sweeping all the lows before. It can't be something like this candle right here, where it swept. It was a nice rejection candle, but it didn't sweep the high that was already made, right? So we'll go back to where we are. After I see this rejection candle, as soon as it closes, I just enter. Stops at the low, take profit at the high. And I just hold it. Never move stop loss, never move take profit, I just hold it. Bang. Going to the stats for this one. Same thing as before, since June 1st, 15 trades, 8 wins, 7 losses. Has a win rate of 53%, lose rate of 46%, but it has a average risk reward of 3.76. Unbelievably profitable. And it's so simple. Like, I literally do it on my phone. All right, we're going to go over the trades I took through this. So if they're marked like this, that means that I actually took them. So starting off on gold here, this is just my New York one. Didn't take that. I just marked it out for the hell of it. This one here I did take, but I took it on a different funded. So this is the funded I took it on. I took it on Tradeify one, but that's not really important right now. Didn't take that. I did take this trade right here, and I can't lie, it wasn't the greatest trade. So this was a loss. This was like a 1.34. Took a loss on there. On silver, I took 2 trades. Now, I'm not trading silver for when I do my prop firm ones, just because the win rate on it is absolutely awful. But I did take this one right here, and this was 1 to 4, right? So I literally just saw this candle right here, that rejection candle we were talking about. Look at that candle. Swept the highs, instantly just entered, banged out. That's all I was looking for. So those are the, and then I took the same one that I took on Friday, but I took it. I was thinking about doing a buy, honestly, but it didn't match the strategy, and then I took a bad trade. This was a bad entry, and I just rinsed a little bit of money right there. Last week on gold, we took 1 trade. It was the one I marked out actually earlier. Banged, and it was the 3.3 risk reward. I took 1, maybe I took more. How many trades did I take on silver? No, it's just the 1. Only took 1 trade on silver. Same thing. Banged. 4.28 risk reward. Sweep. Break a structure. Bang. On GBP JPY, I took 1 trade on Monday. Break a structure. Entered, and it was long, and it did bang. Now my stops were right here, but on the chart it shows that I got stopped out. For some reason on FTMO, my challenge, it didn't stop me out. It didn't actually go underneath my stop loss. So I was actually still in this shit. So even though here it says this is a 2.2, it was actually like a 2.7. Then I took another trade on Wednesday, and this shit was, look at this, 21 risk reward. I got taken out at break even. I put a take profit just because it was such an absurd trade, and we've been so bullish all week. But look at this. If I had just let, this is why you leave your take profit every single time. I mean, your stop loss. Never move your stop loss. If I had left this shit, look at this. Just melting. 21. You put $10, that's 200. Bro, unbelievable. Only 2 trades I took on New Zealand. On New Zealand JPY, I took 3 trades. So beginning of the week, we took a long. This should cash to 2.67. And then we took another one that was a pretty bad one. It was just a 1 to 1.6, but cashed. And then I took another trade on Thursday, and we lost it. UCAD, we took a short, 4.41. I should cash. Did I take any other trades? No, only trades we took. I think that's everything. I don't think I took any trades on this. Yeah, I didn't take any trades. In terms of what I'm going to be doing for my risk, for the gold and silver, like my Asian session one, I'm going to be risking $100 on gold and silver. So technically $200 every single night, unless I lose $400, then I'm gonna switch that to $50 on each one, so a grand total of $100 a night. When I'm risking $100, $50 is gonna be take profit one, $50 is gonna be final take profit, and when I'm risking $50, it's gonna be 25, 25, right? So that gives me, I'll probably switch down to 25 if I end up going under like 200. So that gives me four trades across the board with $100, 8 trades at $50, and then another like 8 at $25. So what is that? 18 trades. I have to lose 18 in a row pretty much to blow my account, which would honestly really suck. For the Forex pairs Asian session, I'm going to be risking just $50 a trade unless I lose probably like, unless my account goes to the final like 250, then I'll start risking $25 a trade. Now for my New York gold one, I'm going to risk $100 a trade because I'm only trading one, so I'm going to risk $100 a trade probably till I get to 500, and then I'll start risking 50. That's pretty much the risk that I'm going to be doing. I don't know why I pulled up the screen here. So I have them all marked out here. Next week, I'm going to go more in depth into breaking down each trade that I take and then going over the actual stats of like the win rates, everything, how profitable it was. And I'm also going to try and do it in a cool place. I said this at the beginning, but I really want to do it at like a beach or something at like 5 a.m. in the morning. I just think that would be kind of cool. So that's the plan for now. And 1 week, we'll see how it goes.